It's time for us to get more education, and in this specific video, you're gonna know how to turn a already profitable strategy into a 90% accurate strategy for Forex trading that will keep you making tons of money. Hi everyone, this is Christian here on YouTube and welcome to a brand new video for the channel. In today's video, I'm going to teach you a 90% accurate Forex strategy that will actually change your trading style forever and will help you make thousands of dollars in Forex trading. So if you're new to my channel and you're into binary options, Forex trading, crypto trading, or any type of making money online, then this channel is for you. Make sure you'll hit that subscribe button below and activate the notifications bell icon so that you get a notification for every new video that I upload. With that being said, let's jump into the video. Hey, before I actually jump into the strategy, if you're watching this at the moment that I'm releasing this video, you're gonna realize that Bitcoin has actually dropped one more time. And as a matter of fact, if you guys remember, it actually reached a level of around $58,000. And today it dropped all the way to $45,000. It was a $13,000 drop, but that's not the most important thing. The most important thing that I wanted to show you is that it's actually reaching a support line in this specific area. As you can see, that this, in my opinion, is going to be the one that will mark the actual retraction and it will start jumping back up. So here's another support line. In this area, in this specific area right here, it will be the entry point if you want to trade Bitcoin or if you want to buy Bitcoin. It will get all the way to around $43,000 to $41,000. In that window, in that $2,000 window, you will be able to enter. And I can guarantee you that it will basically reach around this area by, I'm not saying it's gonna be today or tomorrow, but definitely within a couple of months, it will be around $68,000. Probably will reach the 70 grand eventually. But after this jump, there's gonna be a huge, after this drop, there's gonna be a huge jump just in case you want to be part of it. How do I know it? Well, basically, I can tell you that there is a support line right here. Additionally, the 200 exponential moving average is showing me that there's going to be is going to continue to be a downtrend. Even though it's dropping in this area, it will continue jumping. And in addition, the stochastic oscillator is telling me that it's an oversold market and it's going to become a little bit more oversold market going to happen in this specific area. Just as an extra confirmation, I have MACD right here because eventually this will happen too. And it will combine all of those indicators in order to become a huge Bitcoin jump. Save this part of the video because in a couple months, I'm going to come back and review my predictions. Okay, so right now I'm going to jump into a normal pair so that we can actually talk about this specific strategy. As you guys already know, I have a strategy that I taught you that is in regards to change on trendings. But in this specific strategy, I'm going to teach you everything a little bit more combined and with some different indicators that we're gonna be using. Well, not different indicators, but basically different use of the indicators. So for instance, in here, we're gonna be using a exponential moving average and not directly simple moving averages. So we're gonna start with Euro USD, for instance, and we're gonna look at a 1 hour candle. One thing that you gotta keep in mind is that the blue exponential moving average, which is the one for the period of 200, will basically determine whether the actual trend will continue, yes or no. As you can see right here, this is the 50 moving average, the black one, right? And the 20 moving average is actually going to cross the 50 moving average. So as you can see right here, according to a different strategy that we have talked about in the past, this could be a change on trending. So we can actually enter for a sell position here. Nevertheless, the actual blue moving average, which is the 200 exponential moving average will actually determine whether the trend will continue or not. So as you can see, yes, it was a drop and it dropped all the way over here, but then boom, when it touched the 200 moving average, it continued to be an uptrend. So that's something that you can consider, either for you take profit to close the trade manually, or whether you want to enter the position or not. Now, one thing that you got to keep in mind is that strong change on trendings usually happen right here, like in this specific case. You can see that there was a change on trending based on the 50 moving average, but then every time it touched the 200 moving average, it returned to be an uptrend. But there was one moment when both of the moving averages crossed the 200 moving average, and then it became a huge downtrend. So that's basically what we're targeting. So in this specific video, I'm going to teach you 2 ways to actually handle and take advantage of this strategy. And the first one is a continuous trend. What I mean by a continuous trend is this one right here. For this specific strategy, you're going to use 3 different exponential moving average, the 20, the 50, and the 200. And more importantly, you're going to be able to identify what's going to happen in the market with the MACD indicator as default and the stochastic. You can use stochastic RSI or stochastic oscillator. It's really up to you. I'm using just the simple stochastic on TradingView, but this one and by default as well will determine as well when you can enter certain positions and not to. Okay, as simple as that. How is it that you're going to determine that? We're going to go ahead and find one simple position here to find an entry point, such as, let me just go ahead and find one that I can give you an example. We're going to start from here, from scratch. In this specific area, and this is a strategy that I've seen in many videos, like, hey, anytime the 20 exponential moving average gets touched, then you can enter for a buy or sell position depending on what you're looking for, but it's not always the case. But in here, you can take advantage of the stochastic oscillator. Why? Because if you notice, in this specific drop where it touched the 50 moving average, it crossed the 20th, but it didn't cross entirely the 50 moving average, then you can determine that it could be a buy option just by looking at the stochastic right here. Why? Because the stochastic is actually being oversold. So if it's oversold, there's no other option but to actually go in an upward direction, right? It needs to jump a little bit. We don't know how much, but it needs to jump a little bit. So as you can see, if you enter in this specific area and you realize that it was oversold, this is what you could have made as profit in this specific transaction. If you actually want to put it on a long position, then it will be around, and by the way, the stop loss in this specific strategy, I'll always go a little bit below the 200 moving average, but it's just me. I can go and do ATR if I wanted to, which is pretty similar. As you can see, it's 20 pips and the ATR is around 11 pips. So it's very similar, but just so that you have an idea and take a look at it, it's like around 3.0 risk reward ratio, which is super profitable. We can find a different example here in this specific area. As you can see, this pair is actually, yes, it crossed the 20 moving average, crossed entirely the 50 moving average in this area. So you could be thinking, hey, yes, this is a sell option, so I'm gonna enter for sell. It meet all the criteria, right? One candle crossed, closes below the 50 moving averages. Then a new candle closes without touching the moving, and this candle actually closed below the lowest, right? So you could say, yes, it's a sell position right here. However, you need to take a look at the other 2 indicators that are going on. For instance, this one right here, as you can see, it's an oversold market, right? So that means that it's going to jump. So here, I would just go ahead and stay away from the actual sell position and wait and see what's going on and what's going to happen with the 200 moving average. That will determine whether there's going to be a change on trending or it's going to continue as an uptrend. It's just going to touch and retract. And as you can see in this area is where it started touching again. So what you do is actually you enter here where you see that the MACD is telling you that there's going to be a buy position. So what's going to happen here if you enter that buy position around this area when it crossed? Here, boom, Obviously right here, the stop loss will be a lot lower. Why? Because as you can see, the 200 moving average is really close. So here, yes, you can use the ATR, or it's really up to you. Over here, I can tell you that you can use a minimum stop loss and you're gonna be fine. For instance, if I go with 10 pips right here, like I'm right here, 10 pips, and I actually decide to go, let's say, all the way to, let's say 4.0, which will be super simple to reach. As you can see here, the 2.0 right here, it got to that level. You see, 4.0, 5.0, maybe you will even get to 6.0, yes, 6.0, and even to 7.0. And actually yesterday I shared that story in my Instagram account. In case you don't follow me on Instagram, the link is in the description. And I shared this story where I actually shared a trading that I have for 7.0 risk reward, and it was able to reach a 4.89 risk reward ratio when I closed it. So it was a really profitable trade, and it was all following this specific principle. Okay, here's another great example where you can actually realize that. Here you can see that, boom, it dropped all the way over here, and you're like, whoa, there's a change in trending. I'm going to enter right now. But no, this is just a buying opportunity because of the small retraction. And how can you actually identify that? By this oversold market again on stochastic. This basically means that the price will continue to jump again. Now, in order for you to wait for the entry confirmation, you can see that stochastic always shows a buy option before MACD. So what you can do is wait for MACD to actually cross, like in this area, and then you can enter the buy position. Let's say right here in this area. Perfect. Now, again, since the actual 200 moving average is right there, I would say even 10 pips is more than enough. And that's going to give you a way wider window for your take profit. So again, let's go to 7.0 and it will reach it. You can see right here, 7.0 was reached immediately. But basically with this strategy, of course, you can use your trading view, your trailing stop, in order to get anywhere you guys want to. And as you can see, the trend was so good in this area that there was no retraction like it right here. So even if you move the trailing stop slowly, you will be able to get to your profit, which in this specific trade will be 14.5 risk reward ratio. Okay, so I hope this strategy is like getting super clear to you. Let me just go ahead and find a sell position example. I would say this one right here looks good. So well, not really, because it's not touching the 200. Let me find it. Okay, here we have, well, it's not an actual downtrend though, but let's go ahead and see this specific example. So it touched the 200 moving average, right? And we can see that it's slightly an overbought market. So that means that it's reaching a higher point, so it's likely to start retracting, right? So how is it that we're gonna do, or what is it that we're gonna do? We can see that the MACD right here, it's crossing going down. So yes, we can enter this position right here as a buy, as a sell option, where the MACD crosses right here. And as you can see, yes, we can lose this position. And as a matter of fact, we did. We can put it for 2.0, whatever we want to, but we lost this position, okay? So that actually gives you the idea that it's a 90% and not a 100%. Nevertheless, as you can see in this area, again, it touched and it went over the 200 moving average, but you might be wondering, whoa, can that be a change on trending, or should I just continue with the trend? And that is stochastic and MACD what tells you. So oversold market in this area. So you know that it's going to retract. You just need to know when it's going to retract. This is the second confirmation, the MACD. And what is it that we're going to do? We're going to enter for a sell position when MACD crosses, which is this area right here. And the stop loss should be slightly above the 200 moving average. So we're gonna give it a 10 pip window. And here you can play around with your trailing stop and decide where on when you're gonna close it. This specific transaction can give you up to 17.46 risk reward ratio. Okay, now I'm not saying that you just set the stop loss all the way to that specific area, but it's definitely a good option to always use the trailing stop to keep on moving the trade. As you can see with this specific strategy, you either win by a lot or you just lose a little bit. So 1746 right here, 1746 times, where's this one right here? There you go. 14.5 plus 698 plus 309. That's a 4203 risk reward ratio. 4203 risk reward ratio. If you were risking 2% of your balance, that's an 84% minus the 2% of the trade that we lost. That's an 82.06 return or profit, return on investment or profit in just a few trades. Okay? Now, this strategy requires a little bit more of experience. As you can see, it's not just about the moving average and buy and sell. No, it actually has 2 more indicators and 3 different moving averages and a slight price action mentality or knowledge so that you can actually enter those transactions. Okay? Now, many people, and these are just my final recommendation, many people would actually ask me, hey Chris, can I use this on 15 minutes? Yes, you can. As a matter of fact, yesterday I actually used it in 15 minutes. Chris, can I use this in, let's say, 20 minutes? No. Okay? Just 15 minutes and 1 hour candles. That's it. And I know people are also going to ask me, hey Chris, how can I actually determine the change on the trending? But that's going to be a whole different video where I'm going to teach you how to identify the change on these trendings right here. But as of right now, you already know how to follow the trend using a 200 moving average and when not to trade against the trend, thinking that there's going to be a change in trending. As a matter of fact, right here, I teach you how to follow the trend and make money out of it. So hey, so hopefully if you enjoyed the content of this video and you found value on it, make sure you smash the like button. And more importantly, if you have any questions or comments to share, make sure you use the comment section below. I'll be glad to take a look at them as usual. If you have any questions as well, you can use the comment section below. And if you haven't subscribed to my channel and you want to see more videos just like this one, make sure you hit that subscribe button below. Thank you for watching this video and I'll see you on the next one.